Well, I get it. Today was scary. Ooh, so spooky, but it really shouldn't be scaring you at all. So we're going to talk about some key levels in the S&P 500, in all the large market cap Mag 7 stocks. We're going to get into the Qs, the IWM, as well on today's Stock Market Brief show. Jerome Powell was out and about today. Yes, indeed, he was. And when he came out, there was a couple of things that sent the market a little bit lower. One of those being on rate policy. The economy is signaling an urgent need to lower interest rates. And there right there was enough to cause a little bit of volatility. You take a look at the 11 sectors that make up the S&P 500. We had healthcare down there towards the bottom with industrials, consumer discretionary down there too, probably led by Tesla. And we had energy leading the charge. It's very typical when energy outperforms the S&P 500 from a relative basis. You typically see the S&P 500 have some struggles. If you take a look at the heat map over here, you can see Tesla down there was down 5.75%. That's a big move down, but this is coming after a monster rip to the upside. So it's to be expected. This was the weekly chart of the S&P 500. This was last week's candle into and around that 6,000 level, which, by the way, tomorrow is an OPEX, so maybe that'll free this pin up to get this market really moving. We shall see. We did get extended from the weekly 5 EMA, so to even come back into this area around 5,900, I would not be scared. If you take a look at the relative rotation graph, what's going towards a leading and or improving quadrant, you see XLK is pointing near that leading quadrant, and you have consumer discretionary. Meanwhile, on the flip side to that, you have healthcare, consumer staples, utilities, and real estate this way. So you have the ones that are typically more risk off assets going into a lagging quadrant, while risk on assets are going into a leading quadrant based off of this 5 weekly period relative rotation chart. Now, yes, Jerome Powell came out, said a few things. What did the markets actually do? Let's take a look at the FedWatch Tool to determine that. You can see here, this is the December meeting. What is the federal funds pricing in for the probabilities of a rate cut? Right now, you can see there's about a 41% chance that we will not get a rate cut, okay? That is new to the market, but there's still about a 60% chance, almost, that we'll be getting a rate cut. You can see that here in the probabilities. You can see the dark blue is the current, and what you'll see here is the day ago, it went from this level to down here for the probabilities of a 25 basis point cut. Now, the probabilities of no cut jumped up. So we'll see here as we get more data and as we near that December 18th to see if anything like this changes. Let's take a look at market conditions. So the market came in a little bit. What do you know? It's around that 6,000. We went above it. We came down. We came above. We came down. We talked about that here. We talked about that here, that this would probably be a situation because this has been a massive call wall. So tomorrow we get an expiration. We'll see how things settle in. But even if the market pulls down into this gamma flip line, which is currently at about 5,900, we'd still be in a prior area that was once resistance. And once resistance is broken, it can become potential support. So just be aware of that. Even a move down to this range, and that would just be a healthy consolidation still at this point. Now, on the flip side to this, you can see the shorter term time frames, the SPY, the Qs, the IWM, Dow Jones, biotech, and semiconductors, they've all turned red other than Dow Jones. It's yellow, which yellow means that the 5-day moving average is still calculating up, but price is currently below it. So this is giving us a little bit of a caution sign as it stands right now. We're above the gamma flip line, but we're below some 5-day moving averages that are starting to decline. So let's over here and hop at the SPY chart on the daily time frame. Let's take a look here and look at the measured move still from this cup with handle that we talked about when it was starting to break out. If we measure from this low to the pivot area, it would still take us to and around 620. Right? This is typically the most bullish part of the year, not November, but when you go into December here too as well, the back half of the year. So even as we're holding above this swing low anchored volume weighted average price, and if price were to come down, that could be around the weekly expected move, which we'll talk about here momentarily. But just understand that even if we chop around and eventually head back up, this would still be a target area to pay attention to. So as it stands in this current moment, we still see a series of higher lows in the market paired with higher highs. So what we're seeing currently is just a minor pullback. If you take a look at the 15-minute time frame, we're below that 5-day moving average. We're below the week-to-day anchored volume weighted average price. And here's another little bit of a warning sign. We are below the election volume weighted average price, and we got below it, and it's been holding as resistance. And you can see it's held as support multiple times as well. So if we start to see some more sell-side activity, start paying attention to the lower weekly expected move and the lower implied move, which is roughly in the same area. If we start seeing a bounce up, Pay attention to the week-to-date anchored volume weighted average price and the 5-day moving average, because that's also near the daily implied move and, well, the upper monthly expected move. If you take a look at the Qs, if we measured this move out, which we talked about when this was forming, a measured move would bring us up to and around 555, a little bit lower. And you can see that we broke out of it. We have the series of higher lows forming. And now, after a monster run, the market is taking 1, 2, 3, 4, 5 days of consolidation. I typically like to see 5 to 7 days of consolidation, and then I like to see some follow-through of some sort with the bulls. But right now, we're just digesting a rather strong move, and we're holding ourselves together. So even if we pull back into and around this 500 level, right around this anchored volume weighted average price, maybe it's slightly higher, let's start to look for strength after these levels and potentially catch a move to up there. That would be the more optimistic tone. Remember, things could break down and things could go awry, but that's why we manage risk in the meantime, looking at the market conditions. If you take a look at the 5-day moving average, the 15-minute time frame, we have below a 5-day moving average, like we said, below the week to date, and we're below that presidential election anchored volume weighted average price. So the target down beneath us would be if tomorrow we start getting down into the daily expected move, which is around that 505, 504 area. So be that as it may, if we get down here, may look for strength and potentially start to find a move from there. Okay, IWM, this one's seen a little bit significant more sell side, and this one's pulling into the prior breakout area. We are below the week to date and back into the month to date expected move. If you did catch the live stream, I think we were talking about it this day or this day here, where I was basically saying that if we make it up to the quarter to date expected move or the week to date when we were right around here, I would have looked to short this, right? I wanted a little bit more of a push. Why? Because it's early November and we've already reached up to the quarter expected move and we're well outside the month to date. So I didn't get my short on, but if anybody managed to catch that, I mean, look at this ride right back down to the weekly expected move and the month to date expected move, being that it is already November 14th. So if we get some more sell side, more slippage, start looking at the daily levels. But right now, it's in its kind of happy place, and that is at that weekly expected move and back within the monthly range. If you take a look at NVIDIA, let's look at the larger market cap names right now. NVIDIA hasn't really moved at all. We are coming into earnings somewhat soon, and this one is a large market cap name with a high implied volatility. So where this goes, the market can therefore follow. Right now, we have an open implied move still, 154.09, 141.17. Right now, it's actually really just digesting. It's not really bearish, not really bullish, but if you go to like a daily time frame, it would be considered a bullish consolidation. So perhaps if we start breaking back above these areas, that would set us up for a continuation of that move. Now, what I find interesting here is semiconductors is outside of its weekly expected move already. And on a daily time frame, it is pulling down into a trend line support. If you want to pull that up yourself, be my guest. I would be paying close attention to potential break of this trend line here to get back in. Now, it's going to need the help of NVIDIA to do so, right? If NVIDIA starts slipping here down, I feel like semiconductors can see some significant more slippage there too as well, because, well, NVIDIA is a big weighting in the SMH. If we take a look at Apple, we're above where we started the week, right here, and then we're above the prior close of last week too. Earlier in the week on Monday, we slipped right into the weekly expected move. And you can see from that point, we started to recoup that level. And now we're floating roughly unchanged on the week, but we're above a 5-day moving average, which is bullish, and above the week to date anchored volume weighted average price too. Microsoft here, you can see a series of higher lows on the 15-minute time frame. And we're getting rather tight here as far as the consolidation goes. We had some slippage today with some news outs, but we recovered for the most part. We have yet to tag a weekly expected move. So if we start breaking to the upside, pay attention to 431.50 there on Microsoft. Google is below its 5-day moving average in week to date, and we have yet to tag actually an implied move. But earlier in the week, we got very close to it and we started to see rejection. Then today, we got very close to the lower and started to see a little bit of rejection from that level. If we take a look at Amazon, Amazon started the week, rather muted, but you can see we flew very shortly in a day up to the weekly expected move where we started to consolidate above a rising 5-day moving average and above a week-to-date anchored volume weighted average price. So Amazon just really took a little bit of a break from this move. If we take a look at Tesla for the week started up at, in the first 15-minute candle, up at 351, which was its upper weekly expected move. And since that point, we've been putting in lower highs, trending lower, not quite towards the lower weekly expected move, but I'd be paying attention to that if we get there. But we are below I think that this was the anchored volume weighted average price from the election is how I had that posted. And we are below that week to date, like I just previously stated. So I'd be watching for a change in pace of these lower highs and lower lows. You'd want to see, obviously, that change where you start to see higher highs and higher lows for potential run back up, maybe perhaps next week. And then we take a look at Meta. This one is slightly down on the week, but we have yet to tag one of its weekly expected moves as well. We started the week rather strong. We got some strength, and then we started to slip there below the 5-day moving average and week-to-date anchored volume weighted average price. So why am I showing you this? Well, there's a couple of names that are still showing strength and consolidation, being Apple and Microsoft, and NVIDIA is rather flat. And when we take a look at things like the Qs is just consolidating after a bull run. This is not bad to see. What would be bad to see is if we see a significant break and we start cracking and creating a lower high and then lower low from that point. And then back to SPY, you can see after a strong move, it's very normal to digest. So don't get chopped up in this area because you maybe missed this move and then you rush to trade and then you take too crazy positions and then, you get worn out. And then by the time, it flushes people out, it goes for its next run. So you got to be patient. You got to be calm, and you got to trade what is happening right now. That's all I got for you on today's Stock Market Brief Show. Hope it helped out. And can you do me a favor and smash that like? Thank you.